please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Thereafter. First tick is a red tick, 8 down or 7 down on the Nifty, 11,509. That's okay. Now 10 down, now 13 down. Okay, 10 down. It will count as a flat start. The Sensex is down 15, and that's 38,138. The bank Nifty and the mid-caps are just about as bad. Maybe the mid-caps now are expanding their losses. Nifty Bank is also in flat terrain, so the market continues to keep us guessing. Now the mid-caps are expanding their losses. Okay, what's still in the red? Hindalco, Coal India, Vedanta. So metals, I think the hint was there in what Manisha also told us. Hindalco, Vedanta, Coal India are the big losers. Commodities are taking a hit, as is, of course, BPCL, HPCL. So they're not getting any relief from the minor fall in crude prices. And then you have Indiabulls Housing, IndusInd, Bajaj Finance. So financials are continuing to sell off, despite the fact that the bond markets have not sold off any further. Titan, Bharti Airtel, Bharti Infratel, Bajaj Finance, all of them in the red. What's in the green then? GAIL is in the green, 2.5. Wipro, yes, 1%. And we discussed that even in with our technical experts, with our F&O expert. Sun Pharma is up. So pharma stocks, Sun Pharma, DRL are the two stocks I can see in the green. Yes Bank has seen a little bit of short covering, probably ITC as well. HCL Tech Mahindra among the tech stocks are joining the green brigade. Oh, as is TCS. So I think tech is largely in the green. So is Pharma largely, Cipla, Sun Pharma and DRL. Otherwise, there's just Reliance to give the green brigade some strength.
Okay, well, in the broader markets is absolutely flat. There's no real pressure. And just that the advanced decline ratio has started in favor of the decline. So almost 700 stocks on the declining side. The stock of the moment on the upside is Spark. It's up almost 4%. Volumes are picking up on Spark as well. There's been good progress in their R&D portfolio, as we were discussing earlier. Muthoot Finance, on the back of good numbers, is up almost about 1.5%. Now, Adani Enterprises, the ex-date of the demerger of Adani Gas. And today, all F&O contracts will also expire. So, Adani Enterprises at 212 currently. A couple of these pharma names looking quite good. So not just Spark, but Glenmark Pharma is up 1.5%. Cadila Health is up about 1.5%. Aurobindo Pharma up more than 1%. Biocon is up 1.5%. So that whole pocket is looking good. Apart from pharma, mid-cap IT is also surging now. So you have names like Mindtree. Remember, they've spoken about a very strong deal pipeline yesterday. So Mindtree is moving up with strength, up about 1%. Hexaware. So mid-cap pharma and mid-cap IT, there are two pockets that are, aiding the bulls this morning. Apart from that, a couple of more stocks. Look at Balkrishna Industries is making an attempt for a pullback after 2 days of a massive fall. So up about 1.5% there. And on the losing end, the pocket that's selling off is consumption. So future consumers, Britannia, Jubilant Foods, perhaps there's some profit taking over there. All these stocks are a tad bit in the red. Britannia now 1.5% lower. Otherwise, it's a decent opening, Anuj, you'd have to say. After the kind of massive sell-off that we saw in Asia, a green opening, I think, is something that the bulls would take with both eyes.
Yes, and you know what? The bank Nifty is making highs of the morning and IT index is making lows of the morning. I think if you see Infosys, PSU banks really, I think are seeing a bit of a pullback because of this move on Brent crude, dollar rupee. So that could be the one area where you could see some short covering move. That's the Nifty Bank, of course. Just see the Nifty PSU Bank Index. That's up about 0.5%. I think stocks like State Bank of India, Canara Bank, these are the ones where you normally see the maximum short positions. These are the ones where you're seeing the stocks, at least for now, make highs of the morning. Let us see if this sustains or not. Ashwani, your thoughts on market opening and any trade that you're taking here?
See, you should be getting short on this whatever pullback you are getting. Unlikely it will continue, but I think the trend is clearly down, and any sort of this early morning buying is unlikely to sustain, because a lot of people are probably still long on Bank Nifty and will use it to come off. I mean, it's crude $1, etc. is not going to make all that much of a difference. And let's see if it can sustain the first half an hour, because this sort of a pullback should be used by shorts who have the ammunition now.
So Darshan, would you concur? Are you using this green to lighten positions?
Absolutely, which means that if you are still long in the indices by any chance, exit, and a short position by buying put options should be taken in case the Nifty futures cross 11,600. That would be a perfect opportunity to sell into strength.
Some of these oil marketing companies have been hitting new lows, so fresh 52-week lows for BPCL, HPCL, etc. In fact, BPCL is now down almost 35% for the year. Ashwini, how do you trade these names? I mean, do you trade them at all? And, you know, for the rest of the market, anything that catches your eye?
See, they are now in serious bear markets. USD INR plus crude also moving up. That's not positive. But you know, sell them on rallies, and on the market just get short, because this green will not last maybe even 5 minutes. It's clearly, you know, the macro trend is so negative that you won't be able to hold even 20 points gain. But overall, I think financials, the upside you are seeing should be used to sell. All these, you know, PSU banks, etc., they will all be in the red soon.
Okay, so what's the big call for the day then, Ashwini? This one only, or any stock as well?
See, Bank Nifty plus, you know, all kinds of financials should be used to go short. ICICI is negative already, Axis, Canara, you know, all these guys have much lower levels to come in.
Okay. Well, I just want a word from Mitesh as well. I mean, I can't point out that there is a little bit of green in the Asian currencies today. I'm sorry if I'm misleading people, but at the moment there is. The rupiah also is flat. It hasn't fallen from yesterday's levels. The Hong Kong dollar has not fallen. The rand, of course, very early trades has not fallen. The Filipino peso is up 0.1%. And of course, the rupee also is up 0.2%. I mean, just to put it on the table, it may also see invite only selling, as Ashwini is saying it will in the stock markets. But Mitesh, the final thoughts from you?
So I think the index opening isn't very encouraging. I think, you know, if you want to trade, I think a lot of stocks are breaking down, barring the Bank Nifty, which is showing some strength, and where HDFC Limited looks like to be a good bet. But otherwise, I think most of the stocks are still showing continuation on the downside. And the ones which come to top of my list are Titan, NBCC, IGL, etc. So I think I would be trading more of short positions on a stock-specific basis, while HDFC can be a contra-long trade.
Okay. Okay, gentlemen, thanks a lot for joining us. By the way, the mid-caps are falling now, so don't lose sight of that. Down about 0.3%. It's starting to get a bit ugly. More than 900 stocks on the declining side now. Let's invite our market master, Tushar Pradhan, joins in. He is the CIO India of HSBC Global AMC. Tushar, hi. Good morning. We spoke with you less than a month back, and how things have changed, right? At that time, you had indicated that there's been a cyclical change in sentiment, and you know there are signs of an economic upturn led by earnings. Do you stick by that view that this is still a bull market, and all we are seeing right now is just intermittent correction?
Yeah, so I think the question is a little broader, and let me just kind of give you a little bit of an insight in terms of how this will work out. So there are internal, and as I call it, micro elements, and there is macro, and then there is the external element. I think today what we are seeing is probably a combination of all of these things not going in one direction. So for you to generate a bull market, you need all of these signals in one direction. What is continuing to be positive is the earnings season, and I think the buoyancy and the confidence that we see from companies especially is continuing throughout this earnings season, and there is a lot of indication that this kind of buoyancy is likely to continue. However, on the macro situation, I think things have changed in the sense that you know, the oil price going up, the current account deficit now overshooting what most people thought would, you know, the year would end at, and on top of that, you also have a very strong dollar. So a combination of all of that is clearly going to put a lot of pressure on the macro. So as a result of which, the macro is turning a lot worse than expected. On the external front, we all know that the trade war and the ramification of that across companies in India as well as the entire global trade situation is not something which is a positive right now. And on top of that, if you have disruptions led by the sanctions in Iran or whatever you may give any attention to, is leading to some sort of uncertainty across the globe around the environment leading to the growth that we've actually seen in the US. So while we have currently very strong positive data on GDP coming from the US, positive data on unemployment coming from the US, positive data on capex coming from generally some sectors in India as well, and the earnings growth story. So it is about which part of the world do you see is the glass half full or half empty. I would think that the macro does have an element to where the markets move in the short term. But I think if you're a long-term investor, I think the positive signs are the continuing growth in earnings and the sustainable economic upturn that we can yet see forming in the next few months in India.
Okay. Nevertheless, Tushar, I'm sure that you all would be having some morning meetings with the HSBC Brains Trust globally around the world. What's the received wisdom from them? Are they expecting the currency turmoil to continue?
Well, actually, if you recall, the think tank within HSBC had mentioned earlier this year that the year 2017 was the year close to Goldilocks. And this year we expected it to be Goldilocks, but not as much. So there was a slight degradation in terms of the positives. I think that is something of a view they continue to hold. What they are also indicating that the interest rate rise in the US, which was something which was bothering a lot of people at the start of the year, is going to remain fairly gradual. And I think that's something which is probably going to play out. The GDP growth rate in the US continues to be pretty strong. So I think there are pockets of pretty strong economic growth in the world, but they are not synchronized. So earlier in 2017, there was a pretty synchronized growth phase across all economies. But I think what we've seen is in the US, in Euro, and some parts of Asia as well, there is pretty strong growth. But it's countered by all of these situations leading from the higher price of oil and some sort of pressure that puts into some economies which rely on oil as a large part of their economic growth. So I think when you look at all of that together, it's more or less in line with what we had thought of at the start of the year, that this is going to be a little more challenging year than last year. Okay. But on balance, from a corporate perspective, pretty positive.
Okay. Tushar, good morning. What about market positioning in individual sectors? At the peak, financials accounted for almost 39% of the index, and IT was down to almost 10-11. I was just looking at the data now. It's almost 35-15 now. Your sense on whether we would see some more rebalancing?
Yeah, I think clearly the IT sector is getting a pretty strong tailwind from the weakness in the rupee, and on top of that, we have seen pretty positive sentiments coming out of the US, which is the largest client area for Indian IT. I think a combination of all that and probably the headwinds that we saw of a very strong rupee in the last 2 years coming off, I think all of that is starting to show up in the numbers. We are also seeing very strong, I would think, body language from most of the IT majors. And this time the IT strength is actually running across not only the larger IT companies, but going down into the mid and the smaller companies as well. So I think that's something which will sustain. Anything which leads to strength in revenues because of a lower or a weaker currency is something which we think will continue to do well. And surprisingly, Indian metal manufacturers or companies in the material sector actually also do benefit from a lower rupee, because most of these global metals are indexed to the LME prices, which are dollar denominated. And as a result, their revenues actually do start to go up. So as long as you have your debt under control and your costs under control locally, you'll start to actually make a lot better margins this year as well. So I think that's a hidden part of the Indian economy which also benefits out of a lower rupee. So all is not gloom and doom, I would think.
Okay. Well, for now, one of the stocks or the stock of the moment is Muthoot Finance. It's up almost 5% on the back of very good numbers, as we told you. The loan growth was the highest in the last 11 quarters. So that stock is just soaring away. Tushar, any thoughts on how to approach this entire pocket, the NBFC lot? Some of them have lost a bit of sheen, the larger ones like Bajaj Finance. There's a lot of talk of competition, disruption, etc. But do you think there's still money to be made in this pocket?
Yeah, I think the way you bring this subject up, the lot of NBFCs, I think there are a lot of them, and I would think that there is a pretty strong segmentation that one needs to do. So if you talk about gold finance companies, I think they are addressing a very small and a very specific part of the market. When you talk about Bajaj, it's talking about a very large portion of the personal finance part. Then we have all these other NBFCs which also are pretty specific to in terms of what kind of lending that they do. There is microfinance, there is general housing, there is affordable housing, there is, I mean, if you bunch all of that into NBFCs, it's very difficult to take a call on NBFCs as a lot. But I think if one tries to be a little more granular, you will find that there is plenty of opportunities even now. I think with the public sector banking sector in such a difficult space, I think lack of credit is really the bigger concern, and as a result I think these NBFCs are really filling the gap. So if you have consumption growth very strong in this country, I think the NBFCs are the ones which are funding that growth in a way, and I think that's something to always be very positive about. However, of course, these things do move in cycles. At the moment we are seeing a pretty significant growth in assets across all NBFCs, and that's driving even stock prices. It will plateau at some point of time, but I believe that's still some time away.
Okay. Well, at the moment the market is putting on a little bit of weight, a little bit, not a whole lot. What about metals? Do you think that the best is over for them, Tushar?
Well, I think metals have gone through a little bit of a cycle. So in 2017, we saw the first flush of prices going up after many years, and then they benefited out of the margins that they saw. Beginning of the year, we saw a tempering of those prices, and they were not really making as much money as they were making last year. But as the year goes by, I think especially domestic global metal companies should definitely benefit. As I said, I think the weaker dollar is something which definitely benefits them. And over a period of time, the kind of demand that we are seeing is also continuing to remain pretty strong. So don't forget there is a slight capex cycle which is picking up, initially of course from the public sector. But I think as we follow through, there is a lot of private capex which is also coming to the fore. So I think all of that should support this sector going forward.
All right, Tushar, we'll leave it at that. Thank you so much for joining us and giving us your view. For now, it doesn't look like a bad place at all. Given the Asian backdrop and the 400-point fall across the Hong Kong market, our markets are just about flat.
Yeah, boils down to risk reward. We're still holding yesterday's low as far as the Nifty is concerned. And, the banks are beginning to do well. Let's see, I mean, through the day, if today's low is protected, Sonia, in that case, that could lead to a lot of short covering through the day to day. May not mean much in terms of the larger context of the market. Let's just put that also on board. Market remains vulnerable, but just in the near term, perhaps just too much of, overselling, and that could be getting reversed today.
Okay, well, let's hope so. There's peace in the global, in the EM currency space as well, and that may be providing some relief to EM equities as well. But let's wait and see. All of us cannot be treated equally. Now, let's move to our first corporate guest. In less than a month from the 1st of October, every exchange will be able to offer all types of contracts for trade. Mrigank Paranjpe, the Managing Director and CEO of MCX, joins us now. Good morning, Mr. Paranjpe. Thank you very much for joining us. That really is the first question. 1st October, what are the products from your stable?
So I think come 1st October, we have been preparing ourselves well for competition. Our view is that going forward, we need to make sure that our products remain as competitive, our technology remains as efficient, and our people remain as connected to the market as always. I think in terms of a new launch or a new product, we are not making any such launches for the time being. We will concentrate on growing our options contract. We will also concentrate on increasing the deliverable quantities that we have on some of our contracts. And as we have spoken earlier, we do not have any immediate plans of getting into equity segment or anything of that sort.
Okay, so no immediate plans to get into the equity segment. But what kind of growth do you see as far as the options contract is concerned? How much could your deliverables rise to, just on an average, say over the next 1 year?
So I think we have seen the options contract grow pretty well in the last 3-4 months. As you know, we launched all the options contract during the period of May and June. We have said that in a 2 to 3 year time range, we expect them to touch anywhere between 60 to 80% of the underlying volume. As we speak today, on a day like yesterday, when we had a very good turnover on the exchange, we do get some of our contracts ranging from anywhere from 5 to 6% in terms of the turnover that they have as compared to the underlying. So I think it's been a good beginning for us. Crude especially is doing very well amongst the newer option contracts, and we expect all of them to start contributing fairly healthy by the last quarter of the financial year.
Okay, I also wanted to ask you a little bit about the investment income, because you know in the last quarter investment income was much lower than what the street was expecting with the way bond yields had moved. There was also a one-time loss in your bond portfolio because of the change in the valuation method. Now we've seen bond yields cross 8%. Will there be further pressure?
So I think our strategy as far as our treasury income has been is to move away from all the long dated instruments. We predominantly have a big chunk of our investments in mutual funds, and we try to keep almost all of that in the shorter end of the investment. So I think we have started this process somewhere in December last year, where basically we wanted to move away from the longer dated instruments because they have more volatility. They are susceptible to movement and price pressure when yields move. And by the end of this calendar year, we think our entire portfolio will not have any long-dated instruments in it from the mutual fund perspective. Similarly, we have a big chunk of government bonds as well. These are tax-free bonds that we hold. That's where we took that one-off income hit last quarter. But I think going forward with the methodology change that we've also done, the yield should not fluctuate in any big way. So what we definitely will deliver starting the last quarter of this financial year is a much more stable income in the treasury yield. And in this and next quarter, probably there'll be a little bit more movement away from long-dated instruments to shorter-dated instruments within the portfolio.
Okay, so you have to have an active treasury management. Speaking of which, Mr. Paranjpe, I wanted to ask you, what percentage of total currency markets do you all have? I mean, time was when the OTC market was the only one that traded currency. Now currency futures are giving competition. But what is your volume vis-a-vis the OTC volume? And within your volume, how much are corporates hedging?
So I think just to digress, but currency is still not traded on NCX. It continues to be traded on the other exchanges. And yes, we are evaluating that segment, but we don't see there being a huge revenue potential. I think that's the challenge which we see with that segment today. The total revenue being made by the 3 exchanges in the currency segment is still probably a shade under 40 crores for a full year.
Okay. You have launched options in 5 commodities overall, if I'm not wrong. Currently, there's no transaction fees that is being charged on options, but you did indicate that you will levy this fees once the daily volumes increase to about 10,000 crores or so. By when will you be levying this charge, and what kind of volumes do you see here?
So I think, like we mentioned, we had set ourselves a time frame of either achieving some sort of a turnover in that range, or at least letting the market have an experience of 1 year of trading these contracts. That time period should come somewhere in the last quarter of the financial year, and that is when we will evaluate whether we can start charging on option contracts.
Okay. What's really the average, I mean, incremental turnover revenue you get per new registration?
So I think when you say registration, I'm assuming you're meaning a member here or a broker that becomes a member of the exchange. The deposits that we get from members range from 5 lakhs to 65 lakhs, depending on the category that they join in. So if they're just coming in as a trading member, it's a very small amount that comes in as the deposits that we get. But if they're coming in as a clearing member, if they're coming in as a professional clearing member, it's significantly higher. In terms of any other fees, we currently have a fee holiday which we have given to members specifically because we wanted to use this opportunity where people are unifying their licenses, and we wanted to get many more members enrolled in the exchange. So at this point of time, there's a waiver on the fees. We typically again charge 25 lakhs for clearing members and a lower fee for trading members, but that fee has been currently waived till the end of September.
All right, we leave it at that. Thank you so much for joining us and giving us your views. So that's the word coming in from MCX. The exchanges will offer all the commodities on one platform, and that will be from the 1st of October. So that's a big change, really. And he spoke about how that would impact their own business. Time for a break now. Up next, George Alexander Muthoot, the MD of Muthoot Finance, will join in. That's actually the stock of the moment. Good numbers coming in. The stock is up 5%. Do stay tuned in.